Hi there, everybody. Um, we were going to look at a certain number of questions in terms of the quality, value, and momentum of the top 10 stock traders on the whole of Etoro. So let's look at a guy called J. Edward Smith. Jaynemesis calls himself. I don't know why. I'm sure there's an interesting story behind that. You can see 26,759 followers. Let's look at Jay's stats. And you can see 85, nearly 86% year to date. Fantastic achievement. If you go back, he's been on the platform for 6 years and has got some very, very good results, except one really bad year in 2018. Average risk of 5. Now, if you want to analyze more of his background, please go and look at other videos. There's an excellent one by Andrew Haddon, who goes under the name of Felix Falix. I'm going to do this from a financial perspective. So looking at his portfolio, now eToro does it in a very nice way. The largest holdings go first. So his largest holding is AMD, Advanced Micro Devices. He's got 8.2% of that, Bitcoin 6.4, Microsoft 4.5, Etsy 4.2, and so on. So what we're going to do is look at the value of, the quality first of all. So we looked at this before in terms of the metrics that we have. Now, what I'm going to do is mark it out of 100. Well, I'm not going to, someone's going to do it for me. So let me tell you some of the secrets stock managers use. This is Stockopedia. Now, there's a number of excellent sites out there. In days gone by, this used to be the preserve of investment managers, investment bankers, and those with deep pockets. But nowadays, it's really easy. It's done at a click of a button. So let's go into AMD first of all. Advanced Micro Devices. Let's look at who they are, what they do. Now, I'm really sorry. There's a lot of numbers are going to appear. But what I'm going to do is pick some out for you. So if you look at the top of the screen here, 91 in terms of quality. So quality, remember, is return on capital employed. And I've explained what that is, return on equity and operating margin. Those are the three most important financial indicators of quality. Just before we do that, let's have a look at AMD. So Advanced Micro Devices, global semiconductor company. It's engaged in offering x86 microprocessors, standalone devices, and so on. It's a chip company. Now, they're based in Santa Clara, beautiful part of the world, in San Jose, Silicon Valley. Now, in terms of quality, AMD comes at 91. Now, in terms of valuation, you see here, TTM just means trailing 12 months. So they're looking at the latest earnings report for the quarter and going back 4 quarters to look at the last 12 months worth rather than the last set of financial accounts. So what we're asking ourselves here, is it good value? And you can see it in red, which means no, it's not good value. It's very expensive. The market cap is at nearly 86 billion. Now, what does that mean, 6? It means if you look at the valuation methods us boring accountants use, price to book value, price to tangible book, I'm not going to go through all of them. And here as well, we've got some, the PE ratio, for example. I've explained these things before. Dividend doesn't give a dividend. What it means is that it is, where did it go? It is very expensive. Now, investors are expecting this company to deliver on its next earnings report. If they don't come up with the right numbers, the right metrics, the profitability, look down here, is estimated here at 11.9 billion in terms of revenue, 2.2 billion in terms of net profit. Now, if it doesn't deliver on its estimate in 2020 and 2021, the stock price will get punished. You can see it going up and up and up and up. Had a small dip here, but it's been going up significantly. If you look at the last month alone and the last 3 months, it's been dipping in and out. So value is poor. Momentum, on the other hand, is excellent. Now you ask me, how can a poor value company keep on increasing in momentum? It's been increasing, slightly going down the last 30 days, but 92 is excellent. And how do we measure that? Relative strength. What is relative strength? It's how it's performing against the general marketplace. And you can see all of these numbers are positive. They're all in green. In terms of the price, it's not far off its 52-week high. Moving average, what does that mean? What's the average share price of this stock over the last 50 days? It's increasing, and especially over the last 200 days, today's share price is very positive compared to the past. And you can see that on the chart. It's just been shooting up and up and up. Now, when we plug all of these numbers in, what it shows is that it's a very good quality, very good momentum, but very poor value. That means it's risky if it doesn't deliver. So let's look at Jay's second. I mean, we can't do the same for Bitcoin, obviously. Let's look at Microsoft. And I'm going to just take you through some of his holdings. So Microsoft here, 99 in terms of quality. What does that mean? It's an excellent company. Return on capital is very good. Return on equity is even better. Now, what does return on capital mean? It means how well the company is able to generate profit based upon the money it has. And the operating margin, 38%, that's brilliant. You know, operating margin simply means the income minus the direct costs of producing that product or service. You know, that 38% is really, really good. So quality, you can't get much better, 99 out of 100. Value, 23. Now, compare that with AMD, which was 6. Microsoft gives you much better value, but momentum isn't as good. So you can see the 1 month relative strength is minus. You can see that it's 8% off its 52-week high. And if you look at the moving average versus AMD, it's not as good in terms of momentum, but it represents much better value and quality than AMD does. Let's look at his next one, which is Etsy. Now, Etsy, what do? They operate in a marketplace where people around the world connect both online and offline to make, sell, and buy goods. Okay, so they're based in Brooklyn. Is that near New York, maybe? In terms of quality, we see 93 here at the top of the screen, top right-hand side. Value 11, momentum 96. So again, a lot of people are piling into this stock and they're making the price go up and up and up. Although on today's earnings, it represents poor value. So what we're looking for is Etsy's next earnings to give investors some kind of good news. So then the value, you know, the share price will go up. However, it is risky. Look at the PE ratio, it's 78. Now, the industry average, the average for the S&P is between 30 and 35, and that's considered expensive. So if they don't deliver according to their earnings, you can see estimates here, 281 net profit estimate and 296 here the year after. Doesn't look like it's going to go up very much between 20 and 21. You'd expect more, I think, but this is the average they're giving out in terms of what they're saying to the analysts. Return on capital employed is 14.5, not nearly as good as the others that we saw, especially Microsoft. Operating margin, it's half of Microsoft, it's 20%, but they're very, very different companies. But you get an idea in terms of how it is as a stock. Let's look at another one, Enphase. So this is in Jay's holdings end phase. I can't get this spell it right. End phase energy, here we go. So energy company, what do they do? Provider of energy management solutions engaged in designing, developing, manufacturing, selling micro inverter systems for solar photovoltaic industry. Semiconductor-based micro inverter system converts DC into AC. Right, if you understood that, let me know what that all means. But basically, it's an energy company. And look at the PE ratio, 79. The quality is 72, which is decent. Value is 6. It's in red. That means it is very expensive. Momentum is huge, 95. People are pumping the price up. It's a risky price to get involved in now. It's valued at 13.76 billion in terms of market cap. Although the quality you can see here, we said it's 72. That's shown here in terms of 18.2. Return on equity is fantastic. Operating margin is good. And it's a profitable company as well. I know it's not making huge amounts of profit and it's not have a big revenue. However, it is a good company, just very, very expensive. So let's do one more, UPS, and let's see how the quality and valuation of this company is as well. So UPS, everybody knows what UPS is. UPS is a package delivery company, huge company from America, and they do all sorts of wonderful things to deliver to everyone in the world, logistics and so on. Right, quality 94, you can see here, value 44, momentum 93. Now compare that with the other companies which we've seen so far, and it's much more reasonably priced. You can see the PE ratio is only 19.8. I'd say that's good value. Price earnings growth ratio, anything below 1 is a steal, and that's not too far out. It's growing in terms of its earnings per share. Dividend is very healthy at 2.5%. This is a good company. Return on capital is 16.6%. That's very good for a logistics company. Return on equity, even better. The operating margin is good for a logistics company. I think this is actually a really good company to have. Now, I've done the same for all of these other companies. So Ørsted, Fiverr, Canadian Solar, Solar Edge, and so on, his top picks. And what I've done is I've put it into a spreadsheet. So you can see here AMD, Microsoft, Etsy, Mphase, UPS, and so on. So his top 14 holdings account for the majority of his portfolio. He's got a bank in there as well from the Netherlands. He's got Beyond Meat, Shopify, Siemens, Canadian Solar, Garmin, Peloton, Fiverr, and so on. So he's got a good diversification. And if you take the average of all of these companies in terms of quality, you can see it's 67. Although AMD, Microsoft, Etsy, UPS are in the 90s, Garmin is 97. There are some companies which are bringing the quality average down. Canadian Solar, Siemens, Beyond Meat, these companies are really dragging the overall quality of his portfolio down. However, when you look at the value, does it represent good value? I mean, 67 isn't a bad average to have for quality. But when you look at value, the average value across his top holdings on his portfolio is 21. That isn't very good. I mean, look at this company, Shopify. It's the worst possible. It's so overpriced according to all the financial metrics and ratios of the released earnings reports and accounts that says it's risky. Momentum is very high. Yes, people are piling into it, but it's risky and it represents you know, you're standing on the cliff edge, and you've got to be really careful. Same for Fiverr, Enphase, and AMD. These are all stocks which are incredibly overpriced according to the financial ratios. Whereas if you take something like Canadian Solar, that's 94. That's very good value. UPS, I'd say, is good value as well. Microsoft isn't too bad. But 21 is showing me a portfolio which is open to, especially with Shopify and Fiverr, a great deal of risk. I mean, if you look at the momentum, the average is 78. And again, these very companies that are overpriced are the ones which are growing fastest and have the greatest momentum at the moment. So what does this all mean? It means that he's got a decent quality portfolio. The value is generally poor. That means it's risky, but the momentum is good. So when I look at the strengths and weaknesses of this portfolio, overall, I think he's in a number of different sectors. It's good to see financials, energy, semiconductors, logistics. He's in lots of different areas, which means I'm hoping that his portfolio will be fairly evenly balanced. And he's got a good weighting between tech versus non-tech. And with the dollar so weak, there's plenty of non-US stocks that represent good value. And he's got some in his top holdings, ABBN, for example, and also Siemens as well. I'm not sure whether those are the best opportunities, however. Now, the other thing I do look at is how much cash they have. He's got, you can see bottom right-hand corner, 2% cash. Now, I think there should be more. If we're in an environment where the stock market could go either way, what I'd like to see is between 5 and 10% so that you can take advantage of any dips. He can't unless he brings in money from outside. Now, the other thing is the ideal number of stocks. Now, this is something which has been debated endlessly by academics, but generally they say between 15 and 25 is the ideal number statistically. When you go over 25, especially much over 25, then the returns begin to diminish. Here, he's got 50 positions. You can see that. That tells me he's got too many. And let me show you his profitability. So what you want is the highest profitability coming from your highest holdings. He's got that in Enphase and in Etsy and also in Fiverr. However, what you don't want to see is the holdings which he's got very little of. They're bringing in some profit, but it's going to be very marginal. Why not have more conviction about the top holdings and let them produce more profit to your entire portfolio? If we look at his losses, amongst his top holdings, thankfully, there aren't that many companies which have got losses. You'd have to go all the way down to Microsoft, which is 4.5 holding. The rest of them are fairly marginal in terms of what they're going to add or subtract from the portfolio. So I think this is a fairly decent portfolio. I'd have a lot fewer positions. I'd have a bit more cash and maybe choose the companies which are international with a bit better care. I'm sure there's better opportunities internationally than, say, ABB, for example. I don't actually, I might have got that wrong. I don't know if I thought they were the bank, but let's have a quick look. Who are they? And they're not, they're listed on the US stock market. So I made a mistake there. Apologies. ABB, let's learn who they are. It's a holding company, including electrification, robotics, industrial automation. So they're not international. So it looks like the only international company who's got in its top holdings is SGRE, which is Siemens. Siemens. Gamesa Renewable Energy, and that looks to me like it's based in Europe, Spain. I think there's better opportunities abroad than that. Right, and so in terms of his overall performance, obviously he's done incredibly well. Well done, Jay. Fantastic achievement, 86%. There are some issues which I have with his portfolio, which I've already said. In terms of the way he communicates, generally, I've seen really good communication skills here. He's posted 129 times in the last 12 months, which I think is very good. It's a good portfolio. I think this is a decent fund manager. Well done.